Hey ideators and entrepreneurs, CUNY Startups here. Welcome to CUNY and Beyond, the podcast dedicated to helping aspiring entrepreneurs through storytelling. We're excited to dive into the entrepreneurial endeavors of CUNY students, alum, and bonus entrepreneurs who are willing to share their valuable insights with you. Join us for today's show. Welcome back, everyone, to CUNY and Beyond. Today, I am the host, Adia Johnson, and we have guest Maurice Ng from Tings Capital. Tings Capital is a venture capital firm invested in underdogs for founders who come from suppressed social and demographic backgrounds. Thank you for joining us today, Maurice.
Well, thank you so much, Adia, for having me.
So if you can give us a little backstory on how you got into being an investor.
Thank you for the time and the opportunity to talk about my story. So it's been a long journey of 14 years of coming. So I actually came from a different country in Hong Kong. I was born and raised there. And originally, I was actually a pre-med in Baruch when I first started. And I had that, Asian mentality of, if I become a doctor or a lawyer, I would make my parents proud. That's just a very traditional way of thinking. But as obviously you start to be in Baruch, and one of the criteria of Baruch is like you are, able to take accounting and finance classes, and that allowed me to learn about what it's like to, work in finance. And as I explore that further, I have a goal to get a job on Wall Street. I didn't know what that meant at the moment. I didn't even know what investment banking or sales and trading or all these other specificity in finance was. But I learned to appreciate numbers and business. I've always wanted to be a startup founder in some way. I just never knew. But I was very fortunate that under the Baruch umbrella, I was able to meet with a lot of great mentors and professors and having really good peer influence that eventually I networked my way to get a job on Wall Street. So I began my career actually at Goldman Sachs doing investment banking. And then I, got a full-time offer and I worked in JP Morgan. So I worked in investment banking as well. And obviously, after banking, it's very organic for people to transition into investments, either in hedge funds or private equity or venture capital. And for some reason, I didn't have much luck in terms of joining like the big name firms. But I was really lucky that I met with my former partner. His name is Robert, and he is one of the most successful private equity investor, which also happens to be African American. During 2013, 2014, New York State Pension Fund, which is the New York State, endowment that manages the capital for New York State residents on the pension fund side, granted $1 billion to invest into MWBE, which is Minority Women Business Enterprise. So he was able to raise a fund, Fund 1 in the beginning, with just him. And he needed help. And I was really lucky that because I met him at the right time and the right place. And it was also like very entrepreneurial because he needs someone to help him build a fund. And I would say we're very lucky to be the pioneer fund for this specific mandate. And then obviously over time, like my investment career has progressed for basically 7 years. We built a relatively strong track record of investing into supporting underdog founders. So as I progressed in my career, had a really good exit when I was 28, I decided to actually go to business school. So after my business school career, I worked in a tech company. And then my background is pretty diversified now. And I felt like I have a decade plus experience of basically a collection of investment banking, which is my technical training, investment, which is the same technical job in a reverse perspective, business school, and it's just more like because I should do it before I get too old. And then I also work in the business ops and corporate strategy perspective in a large tech company. I felt like I was equipped to, support founders that are coming from the underdog background. Similar to when I was 19 years old when I first arrived in this country. So that's how like the evolutions of my career started. And now I'm focusing on, being a capital provider for founders and also at the same time giving them the experience and the technical skills I've had so far to empower them to be successful.
You mentioned that you and your partner were building your fund. So what went into that? Like, how did you build a fund and how long did that process take?
Yeah, I would say in the beginning it was definitely a really challenging endeavor because we had one investor, but luckily it's a really high value investor, which is the New York State Pension Fund. And also we were in a shared office space. We didn't really have an office, to be honest with you. And we just had a stack of paper, right? So it's always just about being, scrappy, with the limited resource that we had, but also, try to, find ways to innovate and improve upon. And also, obviously, the fundamental job that we do is our investment performance, right? So we're very hands-on. It's about like kind of having that no ego type of attitude that we do everything, right? From clean the coffee filter to talking as a receptionist to, opening doors for people to buying people's lunch to putting together management team's proposal to closing deals. So it's kind of like the soup to nuts. And obviously, as the fund, progress over time and the investment performs well, it allows for us to gain more tractions in terms of fundraising. So we were able to raise a much bigger fund too because of the fundamental and the investment track record that we basically built a fund for, I would say about 2.5, 3 years before we actually exponentially grow over time. So first fund was a small fund, but fund two was bigger than the first one. And then from there, we just compound over time and eventually become a much larger fund with more of an institutional type of presence in the ecosystem.
So many students may not be aware about angel investors or venture capital firms.
Yes.
So to give them a little kind of like inside scoop on what does an investor do as far as like, of course, they give funding for startups, but what value do they really offer startups?
Yeah, I think oftentimes founders need three things fundamentally to, allow them to be successful. And the three pillars are basically, one is financial capital, which is why they come to an investor for capital. But secondly, will be social capital. So social capital translates into customer introductions, partners introductions, right? They might need help on other things, marketing, PR. They need tech help. They need, building an HR team, building any aspects of the business, right? And we have the network to basically complement them on what they lack in the operational perspective. But thirdly would be political capital. I'm lucky that I have a really robust network of people that are very impressive in their own, industry vertical, reputation, right? And oftentimes founders are looking to build like an advisory board. Right. Let's say you're building like a biotech company, but your biotech experience might be not as senior compared to some of the biotech legend in the world. Right. But if we could bring these people on board and sit on the board to support you, serving as like an advisor, your guidance, your North Star, your guiding light, it can help you, gain more market tractions and also more social proof as you build upon this business, right? So my job as an investor is not just to give you money, but I'm serving as like it's kind of like I'm running like a 7-star or 5-star hotel where my tenants should feel comfortable. My job is to empower them every step of the way so we can grow and, also make profit together at the same time.
I like that. It seems really cool. Like you have tenants. So how many tenants can you physically manage, right?
Yeah.
So it's you and just your partner right now. How many startups can you operationally help with networking and guidance?
Yeah, I would say in terms of the communicative cadence we have is like we have Slack channels and obviously my email and my phone is open for you. But we do have like a cadence for our founders that we, for founders that we've been talking to for quite some time, like, they will give us like a bi-weekly type of updates and we will have a Zoom call or we have a actual physical meeting and we basically make sure that we're meeting all the touch points as we scale the business together, right? For earlier companies that we just onboarded, that we invested in would be more like a weekly cadence. And obviously as you get the feel and the comfortability of the cadence that we've been progressing so far, that you could start to pull back a little bit as you gain more trust and comfort in terms of how they proceed. And the goal is to eventually land that into a quarterly meeting, right? Because it doesn't make sense to meet like every single day, because my job is not to be, like extremely hands-on and breathing down your neck, that type of manager, right? My job is to empower you, but at the same time give you the autonomy and the freedom to, seek help, but also build at your own pace and time, right? So it's kind of like a push and pull type of system. And so it type of varies, but so since there's like no concrete architecture of that, right? My job is to basically build structure within my calendar by being a good time manager for myself. So it's kind of a fluid job, but like if you have a high level of like the goals that we're trying to go at, then you'll kind of understand how you prioritize your time and how you also hold people accountable based on the agendas and the items that you need to hit as well. So it's very, very self-disciplined type of game, and to do it well is you have to, definitely put down a lot of structure and system for yourself to delegate to the people to make sure that they're successful in a reciprocal way. So.
Here at CUNY Startups, we run a program, NVA1 and NVA2, which is New Venture Accelerator. CUNY students get to participate for 10 weeks. It's a free program. They're learning how to start a business from scratch, and they go to prototype. And then from the other part, they go from prototype to pre-launch. At the end of every program, they do sort of like a demo day where they're presenting their startup ideas. And sometimes we do have investors there as judges.
Yes.
So that's giving them a practice run. So what are 3 tips from you as an investor? How can they impress a potential investor during their pitch?
I think fundamentally when you are, and this is not just like for suppressed people, but like as a general holistic way of approaching pitching an investor, is that we have an idea in mind, but we understand where we're coming from, but in terms of how you communicate your idea into your target audience in a very tailored solution is often a misstep that a lot of people have. It's because like you think is very clear in your mind, but as you explain your ideas, sometimes people don't quite understand or follow through where you're coming from. So a good business founder or a good, founder in general or CEO is that they're able to turn complexity into simplicity always. And investors have a way of detecting your communication style in patterns and structure. Not that they're robots that they like to, receive information or digest information in blocks, but it's because they have a subjective checklist in their mind as they're going through your communication, which is your pitch, right? So I think as the founder, it's important to really know exactly what you're building in a very simple fashion. And your job, which is a good rule of thumb, is to always speak to people. I don't care who they are, even though if they're like super smart, talk to people if they were a 5-year-old that you really respect. That's the way I would kind of approach it. You realize that the way I speak is I have pauses. I have points that I'm making. I'm not using super sophisticated jargon to impress people, but I'm just speaking very clearly and sincerely and structurally. And if you could talk about that in a qualitative way, by enhancing that with quantitative bullet points of like, I made this qualitative statement, but it's backed by this quantitative metrics that I have done research on. And this will scale from point A to point B in this very specific systematic path. That's called an investment that's viable. You know what I'm trying to say? Because an idea in terms of a business is basically how you build your flywheel that you could turn this money into more money. Basically, the key answer that investors are looking for is how you do that systematically. But if you cannot even explain to people in a very simplistic way, step by step, in a very block and block basis, it will be a tough role for you to communicate and gain people's confidence, especially when they're just learning about this for the first time.
And what do you feel like people misunderstand about your line of work?
My line of work, they think that we are, just investing capital and hands off. And then we hope for the best and we spray and pray. Kind of like very like gambling or like shooting darts type of perspective. Maybe some investors are like that because investing into startup companies definitely a high bar of risk tolerance. But the way I kind of look at investments is a very systematic approach, and I tend to apply more of a comprehensive, rigorous due diligence approach. And I think of businesses more holistically. And my job is to be not just an investor financially, but I told you earlier, the 3 pillars, right? Is to be a good partner to you by giving you financial, social, and political capital. And my job at all time is to help you max out all 3. So you have full confidence and full team morale to go on and take on the world, basically. Many times I feel like I am the parent of my children, aka my tenants for my portfolio company. It's a maternal way of approaching the business because like if you care about it, you want to be making sure that your children are well taken care of, right? So kind of going back to my hotel analogy that I mentioned earlier.
So you mentioned that being an investor is a super high risk, right? Because you're investing into early stage startups.
Yes.
So I'm sure there's been instances where your children didn't necessarily do as well as you thought they would.
Yeah.
So what type of experiences have you had where there was like a failure with a startup, and how did you learn from that experience?
Yeah, I would say failure is not like a ultimatum. It's like, oh, I failed completely. I think you really fail if you misjudge someone and they are, obviously doing something fraudulent, right? I think that's a complete failure, and I completely stay away from that because that's definitely, not something I can accept at all. I think because the business of investment is all about trust, and especially the job of what I'm doing is entrusting partnership and also in people. So I'm lucky that in my career, I have not experienced any of that so far. But in terms of like failure, I would say these are just like little hiccups here and there. As a really world-class elite executive in the business world, you're going to be going through a lot of challenges and bumps all the time. There's always having that discipline and resilience to bounce back very quickly. And your job is to be able to pivot very quickly and also identify the fastest and the most efficient solutions to solve problems. So it's a constant solving problem job. I guess you could call it failure, but if you fail so many times all the time, which you will do in a startup, you eventually just be like, oh, that's just like a little bump here and there, but I get through it, and you just keep plowing through it. Eventually you will scale and progress.
So I have a quick trivia game that I want to do, like 3 quick trivia. It's going to be investor style.
Sure.
So first question, what do angel investors typically look for in a startup? So we have A, a strong management team, a unique value proposition and high potential for growth. B, a fully developed product, a wide customer base and overseas operations. C, an established reputation, several locations, and profitable operations. Or D, a clear marketing strategy, a high profit margin, and a large inventory.
I'll say A, definitely, because it's an angel investment. So you definitely need to have a solid value proposition, aka what is your idea and how you translate that into business. And how you can translate this into business is to have a team of people that have experience doing this in a comparable fashion. And if you don't have those fundamentally, it's quite difficult to do something that you have never done before.
Investors who take on the potential risk of investing in a venture capital fund are referred to as A, investment managers, B, general partners, C, limited partners, or D, angel investors.
You said investors that invest into funds?
who take on the potential risk of investing in a venture capital fund.
Yeah, limited partners.
Limited partners, yes. And final one, what are the typical components of a venture capital deal? A, rent, lease duration, and maintenance provisions. B, valuation, equity stake, and term sheet. C, salary, benefits, and job description. Or D, credit score, down payment, and interest rate. So I guess when you're making a deal with an early stage startup, what are things that you're looking for?
Yeah. Valuation, I think fundamentally. But obviously, if I'm being very meticulous, I will be looking at the other metrics as well.
All right, valuation was the answer. That one.
Yes. Yeah.
Awesome. Thank you for playing my short little game. So how can our listeners connect with you online, get involved with your firm?
I have a website. It's just www.tingscapital.com. So feel free to look at the website. And also my email is Maurice@tingscapital.com. So it's TINGS capital.com, no space in between. And send me an email and then we could hop on a call. But obviously, one of these days, I'm happy to, come into Baruch or CUNY to support you guys on the venture program. Happy to be a panelist or on-site coach if you need my help. So looking forward to building this relationship.
Thank you. I'm definitely going to follow up with you on that. But thank you for joining me today, Maurice. It's been a pleasure talking to you. Everyone, make sure you follow him, look at his website, and send him an email.
Sounds good. Thank you. Thank you so much.
Okay. Have a great day.
Thank you.